And here's a quick look at how the markets did today. Two of the world's biggest countries, some of the news about two of the country's biggest banks, two of the world's banks on the radar investigators in Israel and in Florida. Four people were arrested in a securities fraud scheme tied to the hacking of J.P. Morgan Chase, and Citibank has been ordered to pay $700 million to its borrowers for illegal credit card practices. In the housing sector, it looks like the bidding wars of the early 2000s are back. The high demand for homes reflects the current market with low inventory. That inventory would last only 5 months at the current average rate of sales. That's about a month short of what it would be in the normal market. Harley-Davidson says it will continue to slow down motorcycle production to cope with the strong dollar. It's making foreign bikes more affordable. Harley-Davidson says it doesn't want to lower prices, citing better quality bikes. The bike maker's new CEO admits he's frustrated as demand has increased over the past 6 months. Meanwhile, analysts at Goldman Sachs say China's stock market drop won't have a major effect on the U.S. The Shanghai Composite Index dropped 30% this month. However, they say Chinese stocks only make about 0.5% of U.S. equities holdings. And Greeks continue to live in fear of even further financial damage. This despite Greek banks reopening on Monday. Now, tomorrow, the country's parliament will vote on a new round of measures in hopes. But given Greece's history of economic problems, financial experts say the European bailout might not be enough to stop the spread of economic calamity.
But I think we're going to see that this process of bankruptcy is going to migrate to other countries. We're going to see Portugal in the limelight, probably Italy, and Lord knows many other countries are going down the tubes.
So there you go. Joining us right now for more on the global economy and the tanking commodities market is Tom Hutchinson, senior financial editor of the High Income Factor, available at moneynews.com/HIF. Tom, great to see you.
Great to be with you, John.
All right, Tom, it looks like in the commodities market, not just a bear market, but a big grizzly bear market this time. Across the board, prices are down at or near low points for the decade, if not more. Gold and silver also at 5-year lows. How low will gold and silver and other commodities go?
Well, this is interesting, John. The Bloomberg Commodities Index, which includes a lot of commodities, oil, sugar, lumber, a lot of different things, to give you a broad picture, is at 13-year lows. Now, the financial crisis was 6-7 years ago. So it's lower than it was at the peak of the financial crisis. And how much lower will they go? I think it depends on the strength of the global economy, and in particular China, because that's what really drives commodity markets.
All right, well, let's talk a little bit more about China right now, because reports show that China's gold reserves have grown by 57% since 2009, and China wants to see its yuan recognized as a reserve currency like the U.S. dollar, the Japanese yen, and the British pound sterling. Still, it was also just revealed that Chinese gold reserves are way lower than previously thought. Can China buy up enough gold to try and gain this reserve currency status?
I suppose they can, and I mean that could actually be a good thing for gold going forward. But what's really knocking gold down, that's what knocked it down today. The news from China that the reserves aren't as big as they thought. But what's really knocking it down are the same factors that have been knocking it down since 2011, namely the relatively stronger U.S. economy and a strengthening dollar. And the story just got new legs recently with Greece and the Chinese stock market and less faith in the global economy.
All right. Also, oil, about $50 a barrel. That's down as well. But this could have an impact on interest rates, too, Tom. With about 30 seconds left to go, we might see an even longer delay before those interest rates start to come back up from the Fed?
Well, we might. I don't want to bet on what the Fed will do. But remember, the lower commodity prices are also stimulative. This is good for the economy.
Okay.
So in another way, it's a reason to step up and raise rates.
All right. Well, we'll see what happens. Like you said, it's hard to know what the Fed is going to do, and they try to keep it that way. Tom Hutchinson, thanks for being with us, senior financial editor of the High Income Factor newsletter, again, available at moneynews.com/HIF. Tom Hutchinson, thanks for being with us.